Hello and welcome to Marco Markets. This channel is for educational purposes only and shares my personal opinions and investment process. Nothing in this video should be taken as financial product advice or a recommendation to buy or sell any investment. Always do your own research and consider obtaining advice from a licensed financial advisor before making any investment decisions. Good afternoon. It's Monday, the 24th of August, 2026, 3:55 p.m. My name's Marco, and we'll have a look at the market closing now. Hope you all had a good day. The All Ordinaries was up 0.49% today, so it did climb and then dropped a little bit throughout the day. Just have a look at the indexes. So we've got the one-day index materials up 2.4%, IT or tech up 1%, and then we've got utilities down 0.9%, communications down 0.86%, financials down 0.75%. And just for a feel for the last week, we've had healthcare's been a leader, 9.65% higher, materials up 8.15% higher. And on the lower side, we've got discretionaries 6.5% lower and financials down 5.82% lower. Have a look at the ASX 200 leaders and laggards. So merge. So NIB Healthcare, which is a private health insurer, was still on the bottom there at 9.3, down, sorry, not on the bottom, down 9.32%. That was there this morning as well. CNU, which is Chorus Limited, which is Integrated Telecommunication Services, down 5.4%. That was there this morning also. Endeavour Group got worse throughout the day, 4.72% lower. We've got Reliance Worldwide Corporation, who do construction supplies and fixtures. They're down 4.65%. And IAG, which is Insurance Australia Group, they do insurance, down 4.1%. I think they were also there this morning on open. Let's look at the leaders. So we've got Ansell still up the top there. Well, not on top, but up there. So we've got deep yellow, uranium, that was there this morning, 12.87%. Paladin Energy, which is also uranium, 10.96% higher. So uranium seems to be where it's at today. We've got Ansell Group. They released their earnings up 9.5%. I might come back to that in a sec. I think that was quite a bit higher. I think it was like 18% on opening. So we'll have a quick look at that. EVT, which do leisure and recreation, that's up 8.5%. And then we've got PLS Group, who are also a miner, and they are up 7%. So you can really see the mining's going well. Let's have a quick look at Ansell. Before I do, I'm just going to forget. So I just wanted to look at cash converters. I covered that this morning. I just want to see how that ended up for the day. Okay, so it really did get hammered in the end, 6.35% down on their earnings report this morning. So, and I did say I was going to look at the chart this morning, but I didn't. So that will give you also an idea of their liquidity. So there's 304 trades today for cash converters. A volume of 22.2 million shares, or a value of around 680,000 shares. So the share price is currently at 29.5 cents. Just have a look at, say, a 5-year graph. And okay, so they're up until around a year and a half ago, they were pretty much at the sort of 24, 25 cent level. And then they did have this fairly big increase between April 25 and July 25. They increased by 52%, and they have lost a bit of that, but they're still up around that 28% mark from that point there. And they've sort of gone sideways since that time. So, but yeah, they're roughly around that 30 cent mark. They do look to be going sideways. So anyway, that's not one I would trade, only because it's got such a low low liquidity, and yeah, it's not a blue chip stock. So I'd just prefer to stay away from something like that. So let's get back to Ansell. Ansell had earnings today, up 10% in the end. I think that's a bit higher than just moments ago. Let's have a look at their share price chart for the last 5 years or so. I know they did really well during the COVID period because, you know, all that PPE that they were providing, you can see that there. So they used to be around the roughly around the $25, $26 mark. And then COVID hit around here. I think all stocks went down initially, and then they were busy manufacturing lots of PPE and gloves and gowns and medical equipment and wearables. So they did climb from around that sort of $25 right up to the $43 mark, and then they did have a decline all the way down to around $22. So they actually lost from the peak to the trough there. In 1 year, they lost 48%, so nearly 50%. And since that point, they have, get rid of this one. And since that low point, they have put on about 55%. So it's about halfway. So remembering that if a stock drops by 50%, it needs to go up by 100%. That dropped by about 48, so it would need to go up by about 90% to get back to that starting point. Let's just have a quick look at their financials, news and announcements, and then if we go to investor presentation, I haven't had a chance to have a look at this, but let's just do it on the hop. All right, so they do gloves, PPE, they actually do machinery as well, which I wasn't aware of, so that's interesting. Okay. All right, so in their summary, they've got strong sales and earnings growth delivered in a dynamic market conditions. So their sales for FY26 was $2.1 billion, which is up by 6.8%. I assume that's on the previous year. Adjusted EBIT, which is earnings before interest and tax, is $321 million. Statutory earnings per share is $1.46 US cents. All right, I'll need to go into a different page because they're starting to mix up us. That's Australian dollars, I assume. Now they're bringing in US dollars here. That's, you know, pretty confusing for the average person. They've got adjusted sales growth by 5.7%. So I don't really like it when everything's adjusted. Like, I understand that, sometimes things aren't normal, but if they did happen, they did happen. Do you know what I mean? Like, they didn't say adjusted figures because of COVID and then reduce them. It did happen and they did have stronger sales. Anyway, um, so their adjusted EBITDA margin. So again, they're adjusting this and adjusting that um, by 15%. So that's up 0.9%. Cash conversion is 113%. Strong balance sheet supported by the Middle East crisis response to ensure customers service to customers. They have a $118 million share buyback funded by operating cash flow. So that's a positive. Like, if companies are able to buy back shares, that must mean that they've got plenty of cash in the bank. Some would argue they should probably put it to use to try and generate more sales, but maybe this is a mature company. Maybe they feel like that they're in all the places that they can possibly be at this point in time. So all right, so their sales $947 million. This is industrial segment financial summary. And so that's up 5.4%. Double-digit growth in healthcare earnings. Growth is strong. Health in half two momentum. So they're sort of flagging that the second half was better than the first half. So we'll see how that goes. Divisive response to Middle East crisis. So obviously that's been a positive for that business. Rightio, what else? Yeah, let's have a look at the actual sales here. So $2.1 billion, up 6% on the previous financial year. Statutory, where's the actual, that's adjusted EBITDA. Here's their balance sheet. So the assets, fixed assets are around the same, intangibles are around the same, rights of use of assets, that's slightly lower. That'll be relating to their leases. Inventories are lower, receivables are higher, payables are lower. Their net debt has decreased, so that's a positive. Shareholder funds have increased slightly. So they're saying they got strong cash flows to be able to fund buybacks and debt reduction. That's a positive. Significant liquidity and balance sheet capacity. Rightio, well, I think I might just leave it there. I'll just see if I can grab their just their actual results without all the sales and marketing. Okay, so let's have a look. These documents are always a lot longer. So they'll do, company history, what they're up to, and that this one's 174 pages, and then what I'm trying to find is here. So group income statement, there's the sales that we saw before, $2.1 billion, adjusted EBITDA, $320 million profit, interest, taxes, profitable. Okay. So The actual profit was 201, so $208 million. And that is a margin of around 9.7%. So that's actually quite good. So, yeah. It's just interesting how they always have to adjust. Yeah, on that note, I'm going to leave it there. So well done to Ansell. The market received that well. I hope you had a good day. Thanks for watching and supporting the channel, and we'll see you on the next one.